when you buy gold mining companies, you're buying gold that's still in the ground. And gold in the ground has never been cheaper in all of history than gold above ground. Mm-hmm. And so what I'm telling people now is, look, I think gold's going higher. Gold could hit 4,000 this year, but that's not that big a gain from 3,250. But if gold does hit 4,000, gold stocks are going to catch up. That means they can go up 5x. So rather than making 25%, make 500%. Well, gold's up over $250 in the last 3 days.
Yeah.
Right. So we're accelerating. Last couple of days, we were $100 a day, and maybe we'll be up again. Maybe we'll be up another 100 by the time they close today's trading. But what's happening, and what I've been telling people was happening all last year, as the price of gold went from 2,000 to 3,000, and nobody cared, and nobody was buying it because everybody was sidetracked by Bitcoin and all the talk about digital gold. Nobody but foreign central banks were buying actual gold. And the reason they're buying gold is because they're getting rid of their dollars. They are preparing for a world where the dollar is no longer the center of the monetary system, where it's no longer the reserve currency. And so if you're going to get rid of dollars, what do you replace it with? Well, gold is the most likely alternative to the dollar. And that's what they've been doing. Although I think recently central banks are probably also adding euros. My guess is that the Bank of China is buying euros as it may be selling dollars, because I think they need to replace Americans as customers. And the Europeans, there's more Europeans than there are Americans. And now that the euro is at a 3-year high and soaring, the Europeans are getting richer as Americans are getting poorer. And so all those goods that China can no longer export to America, they can export those goods to Europe. And as a matter of fact, China is not going to be importing any more goods from America. And so they're going to import a lot of the agricultural products or other raw materials that they used to get from us. They're going to import them from South America. And so now those countries are going to be richer because they're going to have more export earnings. And now they're going to be able to afford the goods that China is no longer shipping to America. See, Trump really overplayed his hand. He thought he had the cards. He had nothing, because it's easy to replace consumption because anybody can consume. We don't do anything hard by shopping. The hard part is production. Supply is what creates demand. It's easy for China to consume what they produce or to trade what they produce with others. What's impossible is for America to consume what we don't produce. So at trade ends, America is stuck. All we have is paper. And that's why inflation is going to go through the roof in America, because we're going to have all this money with nothing to buy. And eventually Americans are going to start buying gold. I mean, they've been selling gold. They've been selling gold stocks. But, I've been telling people to buy gold, for over 20 years. When I first started recommending physical gold to my clients, it was under $300 an ounce. It's gone up more than tenfold. In fact, gold has outperformed the stock market for the last 25 years dramatically. I think the S&P is down maybe 65% priced in gold. So the whole bull market is an illusion created by inflation. Gold lets you see economic reality. But really, for the first time in my career, I'm actually telling people that for now, don't buy physical gold. Just wait. Because even though the gold stocks are at new 52-week highs and they're up maybe, 15, 20% they're jumping finally. But gold stocks are much lower, than they were a few years ago or 10 years ago or even 20 years ago, a lot of them. Gold stocks are dirt cheap. And the reason for that is central banks aren't buying gold stocks. They're just buying the physical gold. But they buy the physical gold that the gold mining companies produce. And their profits are about to skyrocket because oil has never been this cheap in history relative to gold. That is the biggest cost for these mining companies. They're trading at single-digit multiples. Gold mining stocks have never been this cheap, not only relative to gold, but relative to the S&P 500. They're giving these stocks away. When you buy gold mining companies, you're buying gold that's still in the ground. And gold in the ground has never been cheaper in all of history than gold above ground. And so what I'm telling people now is, look, I think gold's going higher. Gold could hit 4,000 this year, but that's not that big a gain from 3,250. But I think if gold does hit 4,000, gold stocks are going to catch up. That means they can go up 5x. So rather than making 25%, make 500%. Well, the Fed needs to raise rates. That's what they're supposed to do. But they're not going to do that. Yeah. There's no way they should cut. They never should have cut. They never should have stopped hiking. The Fed never got into restrictive mode. That was a lie, because credit continued to grow to record levels in the government, in the private sector. That meant that credit was too loose. The Fed never had tight money. Also, look at the price of gold. When Alan Greenspan was Fed chairman, he said that he used gold as a way to tell whether he was too loose or too tight. And he said that if gold got up near $400 an ounce, that meant that he was too loose. And if it got down near 300, that meant he was too tight. Now, obviously, at the time, it was trading at around 350, right? So he was looking at gold as an indicator of whether or not he had the correct monetary policy. Well, Powell watched gold go from 2,000 to 3,000 and cut rates. What was that telling you? Gold was telling Powell that he was making a mistake, that rates needed to be higher. But the reason he's cutting rates is because we're insolvent and we can't afford higher rates. But so I think the Fed is eventually going to cut rates and go back to QE, but they're waiting for everything to collapse, right? Because they don't even know that it's going to collapse, but they're waiting for some signs that the financial system is buckled. Maybe they want to see big layoffs, which are coming. We're going to have widespread layoffs in the United States because the whole service sector economy is going to shut down because all the imports are going to be cut off. So we got nothing to buy. So, all these businesses are going to be going into bankruptcy and laying people off. But when the Fed cuts and goes back to QE, that sends inflation through the roof. So it's high, and it's going to be a lot higher. And then it sends the dollar through the floor, and it's actually going to send long-term interest rates higher.
So if this happens, then, and we're talking about, obviously, these huge moments within the global economy, would you characterize the current move into gold as a long-term shift rather than just a temporary flight to safety? How long is this going to last?
No, it is a long-term shift, and it's been going on for a long time. Yeah. How do you think we got up to 3,200 and change? So no, but gold is going much, much higher. I used to think, back in 2009, 10, 11, back when they started QE, I was thinking gold would go to like 5,000, when gold was like 1,000, and it didn't get there. But now that it's 2025 and we've created so much more money and so much more debt than we had back then, I mean, 5,000 is nothing at this point. That's just a pit stop on the road to much, much higher prices because we have to, catch up to all the inflation that we've created. So, now you're looking, gold could be, 20,000 or more. I don't know. But a lot of it isn't gold going up. It's the dollar going down. When the United States, was first started in 1789, you only needed $20 to buy an ounce of gold. And about 130 years later, when we established the Federal Reserve in 1913, you still only needed $20 to buy an ounce of gold. So the dollar and gold were very stable up until the creation of the Federal Reserve. Now, that didn't change until 1933 with Roosevelt and the Great Depression, and he devalued. And now you needed $35 to buy an ounce of gold. But that was the same until 1971, $35. And then we went off the gold standard completely. And now gold goes from $35 to over $3,000. So gold has gone up more than 100x. But gold hasn't changed. It's the US dollar that has lost more than 99% of its purchasing power. Yeah. When the dollar was backed by gold, it didn't lose any of its purchasing power. It was only when we went to a fiat system that the purchasing power was destroyed. So when I'm talking about $20,000 gold, gold is not more valuable. The dollar is a lot less valuable. And so you need a lot more dollars to buy that same ounce of gold.